So what are the 5 trading strategies that you can consider using as a beginner? We're going to talk about that today, coming up next. So what I'm sharing with you today is not a generalization. It's not something that you must use when you're starting out as a beginner. What I'm saying is that if you're a beginner, it's better to start out with this as compared to, let's say, trading against the trend, okay? So the first strategy that you can consider using is range trading. So what does it mean by range trading? It means that you are trading not the upwards market, not the downwards market. You're trading a market that's going sideways. So what you're doing as a range trader is that you will normally use resistance levels. You would have support levels. Doesn't matter if it's straight, if it's diagonal, okay? Because if it's a diagonal channel, then you're trading an uptrend. So you're not really trading a sideways market, but that's another thing. Basically, if you're trading a sideways market, when the price comes up, test this level a couple of times, at least 3 times, and before it retraces, you will make a sell, anticipating that it's going to test this level one more time, anticipating the price to go down, and when the price reached this level, when it tested this level at least 3 times, okay, I didn't draw 3 times here, but you get my point, then you make a buy anticipating that the price is going to go up, and then so on and so forth. So basically, you're trading this sideways market using very strong support and resistance lines. So some people, when they use support and resistance, they don't just use these indicators alone. They might use RSI combined with this so that they can see here whether is it overbought or not. And also when the price comes down, they want to see whether RSI tells them is it oversold. Okay, now here's the thing, as a beginner, if you see this, if you're trading this in an uptrend market, in an upward market, I wouldn't recommend you selling when it tests resistance. You know why? Because when you're selling when it tests resistance, you are trading against the trend. You are selling in an uptrend, which is, it's like you going surfing, the wave is going like this, and then you'll be like swimming like this, then it's like... So basically, range trading works well if the market is going sideways and you're just trading at support resistance. But be careful with this because a lot of times market would do a false breakout over here. Why is there a false breakout? Because when most people they range trade, they do this, they make a sell over here or somewhere when it tests resistance level, they'll set their stop loss very near to resistance line. So the big banks would pull the price up, stop everybody out, then everybody die before the price comes down again. You know what I'm saying? So one very important thing about your stop loss level is set it at a level where not a lot of people will put their stop loss at. Meaning, don't do what everybody is doing. Don't follow the crowd. Second strategy that you can use is be a momentum trader, right along with the momentum, not against the momentum. In other words, you're using the market strength, in other words, the market momentum, to push the price up in a bullish trend. If you study physics, if you learn it in school, it tells you that an object in motion would continue to be in motion. You're riding on the wave. And the thing is, momentum trading, the good thing is you can use it for short-term trading, and also you can use it for long-term trading. You can use it for day trading, you can use it for trend following. So some of the common indicators that momentum traders would use, of course, the typical MACD. Okay? And then to determine overall trend, they will use MA as well. And also, some people use RSI along with that as a confirmation. Some people use stochastics. Some people use average directional index. Whereas for me, I use a system that I created which requires a little bit of calculation. But if you want to start as a beginner, feel free to learn all this. Just be careful because MACD RSI at the end of the day is still a lagging indicator. Even for stocks, you also have momentum traders. Instead of looking at the financial reports, instead of looking at financial statements, they look at what price is doing right now, and then they see whether there's momentum for the price to go up, and then they just hold their trades for several days, and then that's it. They don't care what's happening in the long term. Third strategy that you can consider is breakout trading, not breakup, okay? What you're trading is that as a breakout trader, when there's a strong resistance here and the price is ranging, there's not much volume, okay? When there's a sudden news release, price would break this level, okay, and traders would buy when the price breaks resistance, and when it comes to sell, when the price breaks support. Now here's the thing, be careful when you do this, because price would occasionally do some false breakout. It would have a candlestick just to trick you that's above resistance line when it's not. So you need to learn how to differentiate between, is this a false breakout or is this a real breakout? So how do you do that? You need confirmation indicators, meaning don't just rely on candlestick breakout to tell you whether this is a breakout or not. Normally you see price breakout from a ranging market during a news release, for example, and not only resistance line. Okay, some traders use resistance and support breakout. Then some people would trade breakouts from Fibonacci levels. Some people will also trade breakouts from chart patterns. Okay, for example, you have a breakout below a descending triangle, then traders would short. For example, okay, descending triangle. When the price comes here and it breaks this support level, this descending triangle, then they'll make a short sell over here. Okay, this is just example. Very important to also learn how to identify false breakouts if you're a breakout trader. Okay, knowing when not to trade is just as important as knowing when to trade. Fourth strategy that I can use is price action trading. A lot of the indicators out there, they are lagging indicators. And price action, you're able to get a feel of how the market is feeling right now. Are investors risk-taking or are they risk-averse? The good thing about reading price action is that you don't need to have tons of indicators cluttered on your chart. And also, you don't have to rely on way too much lagging indicators. Now here's the thing, doesn't mean that lagging indicators is useless, it just means that you use it for different purpose. You don't use it to enter, but you use it as a confirmation. You use it to determine the trend, but you don't use it to enter. You can use it to take profits, you can use it to cut loss, but you don't use it to enter. You know what I'm saying? So when you're reading price action, what you're doing is that you want to understand what is the underlying message that each candle is telling you. Here's the thing, lagging indicators, by the time the price has moved, then it gives you the signal. You know what I'm saying? It's more dangerous if you use lagging indicators alone to enter. Like if you just have MACD on your graph and you just rely on MACD. You don't read price action, you don't read candlestick, you read nothing else, you just rely on MACD. To buy sell, you're gonna die big time. The most basic skill about reading price action is that you need to learn how to read candlestick patterns. Okay? And also you need to know whether is the market going uptrend, going downtrend, or is it going sideways. To put it simply, if a market is making higher highs, hope this is not too small, that is going on an uptrend. If the market is making lower lows, then it's going on a downtrend. One of the skills of reading price action is determining whether the market is going uptrend or going downtrend. Okay. Aside from that, you also need to know how to trade at areas of confluence. Okay, let me just... Okay, areas of confluence. I'll talk more about this in the next few videos, each individual strategy, so don't worry about that. Okay, so the fifth strategy that you can consider is pivot point trading. Now this one, I would say is in between intermediate and beginner. So if you feel that this is too complicated for you, you can choose not to pick this one. I'm just giving you options, okay? So when you're trading pivot points, your objective is that you want to determine where is the turning point. So for example, if price comes down, test moving average, okay? For example, in an uptrend, then you can potentially make a buy. So pivot point trading allows you to again determine the overall trend of the market. Is the market right now going bullish or is it going bearish? If it breaks a certain level above a certain level again and again, then it tells you that market is going uptrend. If it breaks a certain level downwards again and again, then it tells you that market is going downtrend. So essentially what you're doing when you're trading pivot point is that you take several datas. What kind of data are you taking? You're taking previous day high data, you're taking previous day low data, and also you're taking closing price. And of course it's more than this. I'm just pointing out to you a few. In other words, to put it simply, okay, pivot point is just another form of support resistance. So some people use this to trade breakout too. So it's not like a mutually exclusive kind of thing. You can combine a few of these strategies together. Remember when I say don't just rely on one buy or sell signal? Because here's the thing. When you trade breakout, let's say this is resistance. When price breaks this level, you know that it's not a false breakout. Then the next step that you can do is determine, okay, whether does the market still have momentum to go up. Second thing that you can do is find whether there's any price action signals. Meaning you need confirmation after confirmation after confirmation. You know what I'm saying? Like for example, you see a bullish RME forming at this breakout level, and then you found out that there's enough momentum for the price to go up. So there's already 3 things telling you to buy. Then this is a high probability trade. Rather than, oh, price broke resistance, time to buy. This gambling. If it's that easy, everybody can make profit. You know what I'm saying? You gotta do your homework, do the extra things, but not too many things. Don't clutter your whole entire chart. So these are 5 strategies that I want to share with you. And also these 5 things are not something that you must pick, because I've seen beginner traders, they can trade intermediate strategies really, really well. This is just based on my opinion, okay? You can choose not to listen to it. I'm also going to talk about strategies for intermediate traders in the next few videos. And also I'm going to talk about these individual strategies, each in one video. So with that, let me know down in the comment section below, which of these 5 strategies do you use? Okay, so with that, I'll talk to you in the next episode. Bye.